Let's focus on Mindspace REITs. That's the first management on the show. It reported a good set of Q4 numbers. The company recorded its highest ever gross leasing for the quarter at around 2.8 million square feet. To discuss this and more, we have Mr. Ramesh Nair, the CEO at Mindspace. Hi, sir. Good day, and thanks a lot for joining in. Well, give us a few details then. The DPU, I think, in the last quarter, it had gone up a little bit. For the year, what kind of growth are you looking at? And also, if you could give us a sense about how do you see occupancy span out for FY26?
Nigel, we have had an outstanding financial year and outstanding last quarter for the financial year. Our gross leasing for the full year was 7.6 million square feet, which is the highest since listing. Our net leasing was 4.4 million square feet, which is again the highest since listing. Our occupancy rates have touched 93%, which is again the highest since listing. NOI grew for the year by 9% and distribution for the year grew by 15%. Coming to the last quarter again, gross leasing was 2.8 million square feet and net leasing was close to 2 million square feet, again both highest since listing. Our NOI went up 13.2% in the last quarter and distribution went up 39%. We hope the occupancy rates, which are 93%, over the next over this financial year, would go towards a 95% mark.
Okay, got that. All right. You've also said that leasing demand. Basically, I want to understand what kind of leasing demand are you seeing from GCCs as of now? Is there a slowdown, or is it as strong as, say, a couple of quarters ago?
See, it's an evolving situation. We are monitoring it closely, not seen any immediate impact on the leasing market. You may remember that the calendar year 2024, we saw a total net absorption of 50 million square feet, which is an 18% growth. I was checking the numbers of the property consultants for the first quarter this year, the first calendar quarter this year. Net absorption has again gone up 59%, close to 13 million square feet, and gross absorption again has gone up 28% to 20 million square feet, and vacancy rates the lowest in the last 3.5 years. So market doing well. The GCCs again in the first quarter have taken 45 to 50% of the overall demand, and the market is being dominated by big size deals, which we typically call as 100,000 square feet plus deals.
Okay. All right. Mr. Nair, you mentioned that, vacancy rates are the lowest that you've seen in 3.5 years. So it seems as though business is looking good for you. But any headwinds that you can point out to the demand that you could probably share with us in FY26?
Like I said earlier, not seeing anything as of now. For us, the good news, Ekta, is that we've done a lot of pre-leasing. The 1 million square feet building, which we just got completed in Pune, that is again fully pre-leased to a global energy GCC. The 1.5 million square feet building coming up in Hyderabad, which is going to be ready towards middle of next year, that's again been pre-leased to a global banking GCC. So, and a data center, 350,000 square feet, is again been pre-leased. So we are kind of neutralized ourselves from where the market is, in case something goes wrong in the market, we have kind of de-risked ourselves from that.
Okay, fair enough. You do have 3 data centers which are remaining. Can you give us a sense in terms of when you expect the delivery to take place and what is the pipeline looking like as well in terms of incremental data centers?
So our data center portfolio today stands at 1.7 million square feet, total of around 285 megawatt. This kind of helps our portfolio from a long-term leasing. It's all long-term leases, 20-year plus leases, longer lock-ins. The first 2 data centers have already been delivered out of the 5 data centers. The next 3 would be delivered in a phased manner over the next 2 to 3 years.
Okay. All right. Just a quick, question with regards to demand as well. You just did speak about the GCCs, but give us a sense in terms of the SEZ segment, if you did touch upon that already or not. What is the occupancy that you're expecting within that space?
So we've actually been big beneficiaries of the government's demarcation rule change, which happened early last year. If you remember, early last year, the government had allowed part-wise, floor-wise demarcation of SEZ space. I was checking the numbers. Back then, our occupancy rates in Navi Mumbai was around 76%. That's now gone up to 86%. We have already demarcated around 2.1 million square feet of our SEZ space, vacant SEZ space, and leased around 1.2 million square feet of that. So that rule change has definitely helped us.
Okay, all right, fair enough. We're going to wrap it up on that note, Mr. Nair. Thanks very much for joining in and speaking with us. So that's Mindspace REIT talking about how vacancy rates are the lowest that they've seen in their GCC segment in 3.5 years. As of now, they're not seeing any sort of headwinds come in there. And the first and the second data centers have already been delivered. We take a short break, but before we take a break, here is some good news. Network 18 beats Times Internet to become the #1 news publisher on Comscore. News 18 races past the Times of India to be the #1 news brand in the country. And that's not all. At the social plus on platform leadership network level, Network 18 is the runaway leader as per the Social Plus MMX Comscore report for March 2025, with 315 million unique views, which is 55% more than the nearest competitor, Times Internet, at 202 million. News 18 also races ahead of Times of India in terms of Social Plus MMX cumulative reach. News18.com overall clocked 251 million unique views to beat the Times of India overall, with 183 million unique views as per the Comscore report for March 2025. As per Comscore social media metrics report, Network 18 is 2 times bigger than the nearest competitor, with a 54% reach within the 389 million overall social population. And speaking about Indian languages, in terms of Social Plus MMX cumulative reach, News 18 Indian languages is the leader in the category, with 182 million unique views as per the Comscore report for March 2025.